right, good morning. How are you? Just got to clean my glasses if you don't mind. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis. Sorry, I'm just trying to clean my glasses. With the overriding goal of lowering our risk and producing consistent returns. Why? Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! How you doing? Good morning. Yeah, I got dirty glasses, I know. So anyways, thank you for being part of the Forex.Today YouTube community. I do believe we make the world a better place. Today we are going to get the CPI report in the United States of America. So we'll kind of compare and contrast before that comes out. Then it'll come out and we'll take a look at it because we're not just interested in the headline number. We're interested in the core. But we're not just interested in the core number. We're interested in the super core number. You're like, what the heck is a super core number? Well, I covered that 1 month ago during April's CPI release. So maybe you want to check out the YouTube channel. Maybe if you were a subscriber, you would know. But anyways, you can go back to the April one, and I covered that in great detail and furious anger. Glasses are still dirty. Is that better? Huh? Greasy Tom Fords, man. Greasy Tom Fords. Greasy. Anyways, they're still dirty. So that CPI will come out, and then we will go to the actual government report and take a look at it to get all that other information. I posted a poll. If you were to trade the US dollar today, what would you trade against it? Now, of course, I don't say up or down, but whatever. I'm interested in seeing the other side of your trade. Let me know what you got in mind or what you are doing. Now, in the description below the video are links to resources for new or even experienced or even advanced foreign exchange traders. Okay, if you're learning the ropes, I wrote a book many years ago called Strategic and Tactical Forex Trading. It's pretty good. The link is in this description below. You may want to consider joining FX Bootcamp. The main membership is only $88 a year. What do you get for that? Well, you get community access to special events like we just did the FOMC meeting. That's cool. So you get that. You also get real training course, real training courses. What I mean by real is it's not just me sitting at the market babbling like I do all day, every day. But instead, like college lectures and curriculum. Legit. Yes, I do borrow a little bit from Harvard, but don't tell them. And so you will learn a lot. And that's $88 a year. There's 88 hours of those videos. So well worth the 88 bucks. Cool. Then what? Well, for more advanced traders, you're probably trying to get your arms around macroeconomics. So I own a company called Quant-in-a-Box, and it pulls and aggregates and organizes and scores and then compares and contrasts macroeconomic data for all the major economies around the world, some of the minor economies around the world, and many of the big asset classes like, let's say, the S&P 500, the FTSE, the DAX. How about gold, oil? 10-year T-note. I mean, dude, not just currency. So amazing tool. In fact, we'll use it briefly today. But the link to that is in the description below. There's a link to a trustworthy foreign exchange broker. Ha! Yeah, there is one. tradersway.com. Okay? They actually enter your trades into the interbanking system without molestation, like other brokers. So they are a clean and organized and fast foreign exchange broker, and I recommend them. Simple as that. Okay? I haven't recommended so I've been doing this 20 years. I worked with GFT way long time ago, and they got acquired. And then Traders Way. There you go. So the link is in the description below. If you don't like to click the link, you're like, man, I don't want to click the link. They're going to track me, and Wayne's going to earn a commission. No, I don't. So put it in incognito mode. Don't click the link. Type it in manually, but go visit tradersway.com. And I think there might even be more stuff in that link. I think there's a couple of, there's a free training course. There's a free webinar on macroeconomics. There's a lot, dude. Cool. So I wanted to start here, mainly because we got CPI coming out, and the interest rate differential right now just shows you where we stand. According to Quant-in-a-Box, okay, Europe has a 7% inflation level, and the United States only has a 5% inflation level. Okay, so there's a differential, right? But also, check this out. If you look at the change, inflation is going up in Europe. Still. So the question is, if inflation has come down in Europe and then suddenly is going back up, well, is that going to happen in the United States? Will inflation go back up? I can tell you, man, inflation is alive and real around my house. Everybody's has a story about, oh my God, I bought something the other day and I had to pay ... So interesting. So that's a big thing. Europe has inflation higher than the United States. So you would think that they will have to raise interest rates higher than the United States. So they're way behind. And their inflation's rising. So don't be shocked if our inflation goes up. How crazy, huh? How cray-cray. Right when the Fed says they got everything fixed? Maybe not. So be prepared for that. Okay, looks like you guys, I'll end the poll. This is the end. I'll never trade euro yen again. Yeah, so it looks like you're trading USD yen. Okay, let's take a look at that. Okay, I'll move my stop to break even because that's how the Wayne do going into CPI. All right, so interesting. You guys want to do this one. This has the least volatility, so maybe that's smart. You can see we got we're tackling here an M3 to, so my trade plan is this. M2, sorry, I've been saying M3, I meant M2. M2 to M4, so my target is basically $1.39 to $1.40. Is anyone pointing this down? If you're a down dog, you're probably thinking $1.32, sort of a R1S1, but I'm an M2, M4 boy. Is anybody thinking down for this? You said you wanted to trade it. Now, if you are thinking down, what you're telling me is inflation's going to fall from 5 to 4-ish, and the United States has everything fixed. And the Fed can pause if they want. And maybe even the Fed could cut at the end of the year if they want. That would open the door for that, in people's minds anyways. And that would lead to USD yen down, euro dollar up. Okay? Wolfpack says, absolutely not. BOJ is not changing policy. Well, yeah, we talked about that yesterday, last week, and last month. Sure. But you know what, Wolfpack? There's a lot of people that believe they'll keep YCC, but they'll adjust the band as soon as the next meeting. I didn't read those hints, but I think that's, guesses, but that people will often trade on that. Right, Luis? But you got to be careful, like, the latest readings are expected to, I feel like you're right, and I said as much. But when the way you wrote it makes me feel like you get your information by reading other people's stuff, like, let's say, the newspaper or blogs or something, right? What I try to implore is that you get your data by reading the actual reports. Because, right, just the way you said it, I wouldn't say, well, I guess I did say it, but I say it in a different context. So I'm nitpicky on language, but that's how I read what you just wrote, is that you're reading what other people are saying about CPI. And very often that's dangerous because they sell ads on their blog. You're a money manager. And I've seen, you don't have to have any qualifications to be a journalist. And very few journalists are, self-made millionaires trading the markets, and now they want to, blog. Maybe, but very often not. So I'd just be careful, Luis. So just look at the CPI, just look at the facts. So I brought up Quant-in-a-Box, and I just looked at the facts. Based on the facts, inflation in Europe went up on the last report. And so therefore, we need to be aware of the exposure to that risk. But I certainly didn't read it in a blog or in the Financial Times or whatever, So be careful. I want the Financial Times to quote you, not the other way around. Cool. So we will get the report today and we will look at it. And that's where I want you to get your source of information. It's a good exercise, actually, guys, if you're into this. You could, every time a government report comes out, like today's CPI report, you read it and you write a paragraph or two about your thoughts, as if you're going to be interviewed in an hour and you knew you had to discuss the report. What would you say? What is your opinion? Okay, what did it say? What did it stand out? How was it different from the last CPI? What's your opinion? And what is the probable outcome for the Fed? Okay. Okay, neat, right? Because Luis, I want them to quote you. And I'm not picking on you either. I'm not picking on you. I'm not picking on you. That's not negative. All right. Let's go here. Okay. All right. Let's answer the question, why is the euro weak? Okay, let me get my drawing tool. Don't let me forget the news. I only got 10 minutes left. Okay, great. Now I got it. Okay, why is the euro weak? All right, the euro was supposed to hit this level, okay, last month. It got here, it got here, then it got here, then it got here, and then it got here. Okay, so the question is, why is euro weak? Well, that's all up there is the profit taking. Profit taking. And we knew that like 6 weeks ago. So is it weak, or have people just taken profit while we wait for all the central bank news and all the inflation news? Okay. That's all. Okay. Now, another way of looking at it is if you were a bull, this was a buying opportunity, but we knew we were range bound, and this might be a buying opportunity if you're a bull. And maybe we're just waiting for CPI, maybe all that kind of stuff, right? So is it weak, or is this just take profit, take profit, take profit? And now we're essentially likely to be in a range a little bit. There's another explanation. Somewhere around here, I think we had a Fed meeting that said there was a possible change coming in the Fed policy. And I think somewhere in here, an ECB meeting that said they were going to continue raising interest rates. Remember that? She said there's no pause coming. She literally said there's no pause. We are going to continue interest rates. There's no pause coming this year at all. Because they're only at 3.75. They're behind the curve. And then a week later, the Fed said, yeah, we may pause, right? And so this change versus no change can cause this at least consolidation. Now, you might have assumed like, well, shouldn't it do that in that case? Well, then maybe you should wait for that to happen before you engage. And maybe today is that day. Okay. Okay. Family Time says it's probably bullish. What is probably bullish? Okay, but anyways, dollar strong, dollar strong, dollar strong, dollar strong, dollar strong. And to answer the same question from a different point of view, why is the euro so weak? When the dollar is strong, USD up, the euro falls, irregardless of what's going on in Europe. Why? The euro dollar as a currency pair, okay, is 40% of FX. The entire foreign exchange industry. So if the reserve currency is dollar and the dollar pops up, it's the reserve currency. It's the most powerful currency in the world, and it's most often traded against euro, so euro will just get run over. It has nothing to do with euro. It's an innocent bystander. And ECB has gone years with having monetary policy that has no impact on the euro because the dollar superseded it. Years of that. It must have been terribly frustrating. Okay. I don't know, Jermaine. We'll find out. By the way, is it German or Germain? I guess it's just German Copacabana. I guess it's German, right? I wasn't sure if that was your actual name with the Copacabana on it. Yeah, as in Germany, German Copacabana. Sounds like fun, dude. Yeah. Yeah, gotcha. Man, I've been to a couple of clubs with the Copacabana in the name, and I've always had fun. So it sounds like a fun place. So I think we will watch Euro dollar today at the Copa. All right. Let's just do daily confluence. It's still bullish though, huh? All right. I was trying to get off that. We'll flip over here. And put some ribbons on maybe. And that's fine. Actually, let's switch this one over to annual pivots. Oh God. With my motherfucking click, 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 click. Oh God. All right. Yeah. Let's mark this out. So that's the other thing, guys. Why is the euro weak? For those that believe there's going to be a U.S. recession, this is the projected high for the year. 110. So that's the bearish high for the year. And from now on, this pair is down. And by the end of the year, we are below parity. And specifically 91.41. Okay. So that's the other thing. So like retail traders don't think this way, right? And so people are like, so why is it down? And someone else would say, well, dude, we're at the bearish high and it's down all for the rest of the year. And you're like, what about the rest of the day? And there's this sort of time conflict. Like you want to know 2 hours and they're trying to figure out the end of the year next year, right? So somebody's just setting up their bearishness and they're waiting for the technical analysis on smaller time frames to start deploying capital. So with that, that's a fancy way of saying, sell the lower high, son. Click, click, click. All right, hey man, it's coming. The news is coming. I might have gone a few seconds too late. If you get the number, let me know. I'm trying to log into my news source. Trying to log into my database. Come on, you'll probably get it faster than me. real time.
By 4, the Nasdaq up, but just fractionally.
We got a number.
2 points there. Right now, it is time for that CPI note.
And it's what? Breaking news, breaking news.
Read on the Consumer Price Index. Headline number expected to be up 0.4.
Is it out? Okay, dollar weakness. Probably lower. They're not, are they only verbally saying it? All right, so month over month, 0.4, as expected. People are pricing in a pause. We got to look at core and super core. They're not giving the numbers very well. I need to stop using this particular channel for the headline. Well, if it's core up, that'll whipsaw us here on the move. Okay, 4.9 year over year. Okay, so core as expected, but headline core is better. So I could see that as being risk on, Fed pause. I could see that. Stock market up. Oops. Okay, we'll flip over there. By the way, I heavily readjusted my portfolio last night. Heavily. Actually, during the market yesterday. Heavily reconstructed it. And I took a lot of risk out. A lot. So this is moving up, and I'm okay. I work all night and I sleep all day. Be careful of this number here. Oops. Be careful of this number here. And the next one's here. I took a lot of risk out of my portfolio and took profit on a lot of single name stocks, or took profit on single name stocks that were up quite a bit relative to, I don't know, the markets were down and then they're up, and now they felt toppish to me. So I moved over to my pension fund strategy, my endowment fund strategy, which is cool. What's up, SpongeBob? Let me know what you think. 4.9 versus 5.0. Yeah. Is he gone? So I want to look at Supercore and such like that. Let's see. Oh, I pulled up the wrong one, I think. This is the end. But dollar weakness is good news. So no matter how you look at it, oops. I'm thinking about what SpongeBob said. No matter what you think about it, you're like, oh my God, that news is horrible. Maybe so. Maybe so, but the markets say good news. That's right. That's what we see now. So if you think it's bad news, then you should tee up the buy the dollar later, right? Okay, Richard. So what's next then? Okay, index for shelter was the largest contributor to monthly. Yeah, so we still have sticky inflation, followed by increases for used cars. No kidding. And gasoline. The gasoline is seasonal. Yeah, I'm thinking about dumping the Porsche, by the way. Get rid of the GTS Magnum. And those prices are high, huh? Right now, that's interesting. So look, it you know, it's trending down. Okay. And you know what's interesting too? We went through this whole period where core was less than headline, and that's interesting. So look at that. So it's still, and now, you know, there's food unchanged, energy was up significantly. Shelter index. So yeah, so you got to take out shelter now, and there's still quite a bit for that supercore. Be careful, Luis. It seems we're going up today. Well, you got to be careful. So one of the things I was talking about yesterday is standing your ground based on your opinion, based on your bias. And I would be shocked if there were not traders waiting to sell up here. That's why I have a line here. So again, I don't mean to speak over top of you, but you know, you're confident enough to post your opinion publicly. So you're strong, I think, right? You're strong. And I don't mean to challenge you. I'm just trying to use the opportunity to educate. Some people would look at this candle and only buy it because of that green candle. Well, if you're going to buy the green candle, you need to wait for it to come down to about this price before you can really buy it. If that's what you're going to do, that's how you do it. I'd caution you, though, other more sophisticated traders already have their opinions set. And they're like, when it gets to 41.50, sell it. Why? Well, they're fundamentally bears, and this is going fundamentally the wrong way according to their opinions, according to their research. So I find it's dangerous. So again, I'm not picking on you. Thank you for sharing. But it's a dangerous thought process of, I guess it's up now because of the giant candle. I don't like the thought process. So instead, what I want you to say, Luis, okay? It's the same thing, but it's less dangerous. I guess I'm buying the dip. Okay? I'd rather you think that way and say it that way, okay, Luis? And by the way, am I saying it right? Is it Louis or Luis? Which one? Louis or Louise? Let me get it right. It's your name. I prefer to pronounce it properly. Is or is? No, don't give me that nonsense either. There's no... it doesn't matter. It does matter. What does your mama call you? No, don't answer that. Yeah. See? See? I knew it. Yeah, yeah, I knew you could hang. So again, I'm not picking on you. You're strong enough to handle critical feedback, so that's cool. So this is how I'd want you to think about it. If that, right? Okay. Because I'm just telling you from years and years of experience, my own experience, but help mentoring others. Yeah, it's a dangerous thought process, and it's just a slight tweak, but it's a huge difference in mentality. Right? Buying the dip versus I guess I'm long. By the way, that reminds me, I've been mentoring somebody and then family issues came up, so he's got to put that on hold. So I have a little extra time for mentorship. You sign up at FX Bootcamp, and then when you sign up, you pick the schedule. I already have my time slots available, so you pay for the mentorship, and then it gives you my calendar, and you pick the time you want to meet, and then we meet. So it's a really cool system, and it's all built into FX Bootcamp now. So when we do our mentorship, it's got built-in Zoom private room built right in, and I could record it, and when it's done, it just posts the recording to you personally. Plus, I can keep notes, and you can see the notes that I keep, and we can track homework, and you could schedule the next meeting, and it could be later in that week, it could be later in the month, it could be later in the quarter. It's really cool. It's all built in. It's really nice. Very nice. So anyways, I got a little bit of time for that, only because I've already scheduled the time. Cool. So anyways, big move in NASI, big move in S&P. Very nice. I did take out a lot of the volatile stocks in my portfolio, but I'm okay with that because my prime concern was removing risk, and I did it at a high price, which is fine. So if it goes higher, well, dude, what can I tell you? I don't know the future, so I can control my risk. I can't control the outcome, but I can control the exposure to risk. Yeah, minis. I don't want to look at minis. All right. There's your gold. Okay. Remember, we've talked about all of this risk on, how this impacts other asset classes. So if you look in the top right, S&P 500 goes up. Therefore, gold goes up. Therefore, WTI goes up. Therefore, Bitcoin goes up. Right? So as of early this morning, I own half of a Bitcoin. So I plan on selling it to some sucker later today or tomorrow. So I got green on the screen, and that's good for the wanksta. Huh? Yeah, this Jay-Z, by the way. Beep, 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 ding. I don't know. I can't quite have the tune. I have it in my head. Can't replicate it. Does anybody know the Jay-Z song I'm talking about? Anyways. Green on the screen, good for me. Profit taken on gold for day traders. Actually, we didn't plan. We planned this one 2 days ago. That's right. I didn't do the day trading meeting yesterday, but the day before we had this, and then a follow up on this because we were then tying that into swings. Is it dirt off your shoulder? Get that, right? Yeah. Cool. Anyway, so that's great. That's risk on. WTI up, that's risk on. S&P 500 up, that's risk on. Bitcoin up, that's risk on. So you would expect US dollar weakness. Okay. And you have US dollar weakness. So this is everything I've taught you. And if we do it even on a smaller time frame, instant. Okay. Okay, you see? That's all what I taught you about currency correlation. And that has to do with macroeconomics, which is really nice. So I teach a Newtonian physics point of view to the market. Now, not everybody would agree with it. It is mine. So if you're curious and like, whoa, okay, like Aussie up is risk on, CAD up is risk on, Kiwi up is risk on, okay? Typically in this scenario, if it was global macroeconomics, like truly global, Swissy and yen would be down too, but this is clearly reserve currency news, right? This is clearly US dollar, so it looks like the market has interpreted the data as an improvement. 4.9 is better than 5.0, and they're playing the pause. So they're saying a pause. Okay, cool. Once again, and I explained this yesterday and the day before in the day trading group, because they always get things a day ahead, about reading an economics paper that was written 99 years ago. And they said this situation is, the inflation comes from a poor management of monetary policy, and it goes into the specifics. They said the first consequence of that poor monetary policy is inflation. Okay? But they said the recession is going to be from something else. And the recession fears that people have been trading in the risk off, even myself included, right? In the annual outlook, I talk about how the recession is going to happen in the second half of the year, and that there's plenty of room for risk on before things get worse. And I talk about the things that we need to watch for to know if things are moving to the second half. So I literally break the recession into two mathematical formulas. I did it in January and I reaffirmed it in April. The two mathematical formulas and the variables that go into them that help you understand where we are in the process of having a recession. And I said, well, based on the math, the recession is way off, like fourth quarter of 2023. Now, using this economics paper from 100 years ago, they said, no. If you take what the paper says, okay, again, 100 years ago, we already knew how to handle these problems. He said, right, if I take what the paper says and apply it to today, it's next year we go into recession. And that, nobody's got that. Nobody's got that right. That's not priced in. Now you might say, well, I saw a guy on TV, he said that. Well, okay, dude. But when you look at the aggregate of like the Fed watch tool and banks negotiating with banks, nobody's got that negotiated. It's John Maynard Keynes' treatise on monetary... hang on, I probably still have it on my phone. And yes, this is why I don't know, dare I say it, this is why I'm a good coach. This is what I do for fun. This is what I do in my free time. I do stuff like that. I don't have it currently. It was 1924, John Maynard Keynes. I could probably find this here. Oh, I gotta move my coffee. John Maynard Keynes. I'll do that. Maynard Keynes treatise on that's probably enough. Mm-hmm. Oh, this is only part of it. No, that won't be right. What? It took me to a different thing, didn't it? It did. All right. This is the end, my only friend, the end. No, but Richard says she doesn't see that till the fourth quarter. I said that in January, Richard. That was my opinion. But my opinion wasn't guess, it was based on math. So I explained the two pieces and I said, well, that says much later. Okay. Oh no, this is a different one. See, this is later. This is the follow-up. Maybe I'll read that one too. The book, Nature of Money, The Value of Money. This is a different book. So anyways, you'll have to do your own Googling. The year was 1924. I'm going to keep this up because I'm going to read that one too. I don't think I have Keynes open above me. Hang on. I have books. Yeah, see, my books are too old. So I have a collection of Harvard books that are well over 100 years old, and they're museum quality. So I need to get back to New York. I just haven't been to New York in a long time, but I'm going to donate them. I'm going to donate them. And so they're older than Keynes. So, but there's some pretty good stuff in there anyways. But so what I'm saying, Richard, is the Citigroup analyst that came on and said the fourth quarter. Okay, that's what I said in January. But what I'm saying now is what John Maynard Keynes said in 1924 is we're using the wrong indicators to predict exactly when the recession will hit. And some people are doing things like when the yield inverted. And I've said things like that in the past. Now, the yield inverted, let's say 4 or 5 years ago, and I laughed at it because it inverted for the wrong reason. And it turned out, it seemed to me like the average analyst on Wall Street was 22 years old, and they just remembered the textbook said yield curve inversion and you go into recession. And I'm like, dude, no, that's not what's happening because the Fed is inverting it, not the market. So I laughed at it, and of course we didn't go into recession. The only thing that put us into an economic decline was COVID. And again, that's an exogenous shock, black swan event, not yield curve inversion leading to a recession. So I said you have to pay attention more to like what actually in the real world changes the business cycle. Okay. And so now we're kind of getting closer to that, and the Fed is kind of getting out of the way, but the market is still sort of retarded based on what the federal government did to it. So like shock therapy, right? So is it fair? Maybe, maybe not is where we are, but I still go through the old mathematical formulas. And what Keynes said is there's other things you should be watching for in this scenario to start the clock. Not on probability, on monetary policy. But not on probability. No. And again, it's 1924. So if you pull it up and that's 1932, well, that ain't it. So, I'm just seeing if I can find it. So one of the things you do, what you should do if you have an economics degree, is study Keynesian economics, right? Cool, there's some leather-bound books on his policy that you can buy. Yeah, he wrote a lot in this period, so there's a lot of volumes of stuff. Yeah, I guess you would end up reading it in order. Anyways, you'll have to do it on your own. Well, you understand, Angel or on Hell, you have to realize that this is one paper in a time when the only way for people to communicate was writing. Okay, this was sort of like radio had come out, but people were still writing. So he and von Hayek, who was the opposite of Keynes. So I think you had, what was it? Oxford versus London School, LSE. So you had von Hayek and you had Keynes, and they published like crazy multiple times a year, because that's how you communicated back then. So you don't read like one paper and say, oh, so this is, Keynesian economics. No, Keynesian economics is a lifetime of study and publishing, right? But you would argue, there's a couple of arguments. Should you manage the supply curve or the demand curve? Or should you not do anything at all? Those would be three different opinions, right? And of course, the fourth one would be a little bit of both. So it would go into that. So you would study Keynes, John Maynard Keynes, right? So you'd John Maynard Keynes. So you study him. Let me just get this out of there. Okay, so you'd wiki this dude, John Maynard Keynes. And then you'd go, von Hayek. Hayek? Yeah, I had it right. Friedrich von Hayek. And he would be the counterpoint to John Maynard Keynes. F.A. Hayek, Austrian-British, so he's the Austrian School of Economics, political philosopher. So what school did he go to? Well, he worked for LSE, I think, wasn't he? The LSE guy? What are the main arguments of von Hayek's theory? Okay. So I got something in my browser I got to kill. All right. Planners would inevitably impose some set of values on society. In other words, government planners could not accomplish their task without exerting control beyond the economic and political realm. All right, so that's part of it. Basically, what he's saying is maybe the government should just stay out of it and let banks fail, for example, because eventually they start picking the banks that will fail and the ones that will not fail based on politics, right? So they're like, well, we'll let this bank fail because we disagree with the CEO's view on abortion or gun control or something, right? And all that kind of stuff. But what we're talking about is more economics, and he would argue all the time. They spent their whole life, John Maynard Keynes and von Hayek, arguing. And if you remember Margaret Thatcher, she loved von Hayek. So it's sort of like free markets versus manipulated markets, supply versus demand. So Keynes would have been demand, all that kind of stuff. So anyways. So you're going to have to probably buy a book on Amazon for $12 and read all about it, not just one paper. That's all. Yeah, Richard's like, these curves have been inverted for a long time, and it hasn't had that kind of impact. Who the heck would that be? Well, I can't take it now. Who would that be? I don't know who that would be. Anyways. All right. So dollar's still down. That's great. That's very good. Good. Let's go back to the markets. See how this is working out. S&P 500 hanging high. Get ready for the profit taking. Look at very clearly, gold profit taking. Remember, we knew this last night, that's the price you would pick to take profit for the day traders. We're kind of hanging up high. Same thing in the S&P 500. Here's the breach. There's the pullback off my buy zone, back up to there, but now you're in your sell zone. Be careful. Remember, that's why I said right off the bat, I guess we're bullish now. No. I guess I'm buying a dip now. So right now the dip looks like it should be around 135. See, it went up to 41.50, which I declared already. And now there's a high probability it comes down to at least 135, 41.35, in which if you were a bull and you wanted to buy it, that would be the better price. Bulls buy dips. WTI has come down. Same. And Bitcoin is still going up, which is good for me. So to put this in the real world context, like I said, I got a half a Bitcoin sitting in my account, and I will try to let it run a bit more. I'm going to check for daily profit taking, which we're pretty close. And I'll probably convert my Bitcoin to cash. Huh? Because I'd rather have cash. Okay? Cool, right? Cool beans, right? Okay. Aussie dollar through the daily target. USD CAD. Let's see. Still range bound, son. Be careful. But now you might have this lower low, lower high scenario. Okay. Which I've already talked about in the day trading group. Okay. Euro dollar. Not quite to the profit taking. Pound dollar definitely on the profit taking zone. Look at that. And then Kiwi, look at that. Not just daily, weekly profit taking. Nice. Awesome. Nice, right, Richard? Nice. Cool. So thank you for all you do. Day traders, I'll see you at 4. Peace on earth. May the pips be with you. May your profits be above average. That just happened. Booyah.